Hi, this is Paul from xbratalgos.com, and this is a tutorial about our reversal module on our range breakout auto trader for the enterprise membership. But I'm going to make this video public so you can see some of the things that we do. So this is FDXS. I'm going to show you some examples on 6C and GC as well. But one of the main criteria that we have for trading the range breakout is that we define the range, so that for FDXS we're looking at the London Open really, and then we put it in a colour. So this London Open here was green, so we're only looking for long trades. We didn't get a trade. Comes back, and then a separate module is called the continuation trade. So when it comes back through that opening range and it's green, we look for a long. In this case, it failed and we got a loss. Then we got another one here, and it continued to carry through all the way till Friday and closed on the Friday. So really big trade. But one of the things we were missing is this reversal here on the London Open, or data points, and I'll show you some of those in a little while. When we get that bias, it's green. We've got the opening range defined, and we're looking for the long. It doesn't. Some data comes out, some news comes out, which turns it around, and we weren't able to get in until just recently, when I've had the developers develop what we call the reversal module. The reversal module has to be run on a separate chart set. So I'm just going to flick over now. So this same London Open on Thursday, we got the trade with the reversal. So as you can see, the price action just comes out slightly out of that range, turns around, reverses, and we enter short here. Target 1, target 2, target 3 didn't get a hit, but then the last contract came and took out the trailing stop at 10 ticks. So it was a winner, and it gives us more trading opportunities. And these are the trades that went on the normal continuation trade. So let's have a look at the module actually on the strategy. So what we're looking for, remember, is those reversals, and we've got some points in which we can dictate some rules, because trading is all about rules. And when we've got the module for the opening range breakout, when we're just doing reversals on the separate chart set, we don't have opening trades enabled, and we don't have the continuation trades enabled. We just have the reversal trades. So a couple of minimum and maximums first. So when we get this first move out of the range here, the maximum it can move is 0.75. This can be changed, and it is different for different types of instruments, but on FDXS I put it 0.75, which is 75% of this opening range. If it moves any further than that, we won't trade any reversals. The minimum is 0.1, which is 10%, so it has to come out a little bit first and then reverse, but it has to do at least 10% out of that opening range. Maximum bars after opening. So again, some of these will be set at 5. It's changeable, but right now FDXS, when we've done the optimization, we say, within 10 bars, when we get a reversal, we need to trade it. Obviously max range is at 0, so that means there's no max range. When we're doing these reversals, what I found is it doesn't matter what that opening range size is. When it reverses. As long as you've got that maximum first move and minimum first move within there, we've got a high probability of getting those trades. Obviously quantity is very self-explanatory. I put 4 here, but this is 4 contracts. With the normal strategy that we do with opening range and the continuation, we use 3 contracts. The idea with having 4 contracts and taking 2 off at the first target is to cover any loss in case we actually get tiptoed into this trade and it reverses around. So it is a strategy on its own, the reversal strategy, but also it's a strategy that if you get a quick reversal and you're in that long trade and you get a loss, it helps fill that hole reasonably quickly, because when these turn around, they just turn around really quickly. So we've got quantity 4, the order type, stop market, entry offset, so we want to go 1 tick, in this case below the opening range. stop loss offset 2, so we'll put it 2 ticks above that opening range. The break even trigger, so when the move goes through 30 ticks, we put the stop at 10 ticks. Okay, so we've got a little bit of wiggle room there, and some if in case it doesn't quite reach our targets, comes back, takes a little bit of profit, covers our costs. The exit mode on reversal at this moment in time, we're just using target. We're not using our confirmation mode, which we use on the other strategies. At this moment in time, it's just a quick target, because sometimes these are moves and they run out of juice and come back down again or up. So then we've got target, exit modes, targets. So we're going to go for two contracts at 50 ticks. So at this point here, where my cursor is, 2 contracts were taken off, profit was taken at 50 ticks. In theory, when you've got 3 contracts, and if it's a loss and you've taken 2 at 50, in this case we'd still be in profit right now. And then a further contract at 75 ticks, and then another contract at 100 ticks. That last contract didn't reach the target. In this case, when the price action came back, it was taken out at 10 ticks. Confirmation, fast period and slow period, again, we're not using confirmation exit mode, so that really doesn't come into that. So these confirmation settings down here, they don't come into with the target. So that's the settings that we use. And again, it's very important for those enterprise members that if you're going to run reversals, you don't run it on the same chart as the opening range breakout or the continuation breakout. So that was an FDXS example. So I'm just going to show you an example now on gold. At the moment, we're only running gold on the xBrat algo. We're not running it on the breakout strategy, purely because they reversed a lot just lately. And this is one of the reasons why I had it developed, because we're getting those reversals quite a lot. So this is on a micro account. This is a micro account. So this is just one contract. And what we've done here, if we go to the strategy, again, it's just on that one chart set just for reversals. So let's just go to the reversals again. So we have 0.75 for maximum. So this first initial range here was red, so you're looking for that short. It never actually happened, and it didn't even come 75%. It stayed within and just turned around really quickly, because this particular strategy is on Thursdays and Fridays, with the gold pit open at 8:20 a.m. EST, and then the major data coming out at 8:30. There's sometimes a reversal on that initial range, and we want to get in that. Even if you look on the minimum first, that's at 0. There's no minimum first, so if it reverses within that range, we can still take this trade. Very, very important, this, because data can turn this around really, really quickly. We're on the 10-minute time frame here, so that 8:20 to 8:30 is defined here. That's the range. Then that data comes out, and when that happens, we either push straight down, in which case we won't get the reversal, because this is red and the range is red. But if we get that reversal and it comes back up through, boom, we take it really, really quickly. And with a micro account trading full GC, so I call a micro account because it's less than $25,000 or even $50,000. So you're predominantly trading micros. You'll see at the bottom here, MCL, MYM, 6E is one that's a real contract. FDXS is micro, MNQ, MCL. So it's a micro account where we're trading 3 to 5 contracts on micros on the strategies. But with this one, we're trading a full contract of GC, and I'll show you why on the performance report in a minute. But we've got one contract. Okay, the maximum range size I've actually inputted here as 60 ticks. Okay, so if that opening range is more than 60 ticks, it will not take the trade. We're going to, entry offset is 2 ticks this time, because we want to make sure we don't get tiptoed in. Stop loss offset is 2 ticks. Break even trigger is 15. So when we get to 15 ticks, automatically puts the stop loss at 5 ticks, locking in $50. we've only got one target, and that's 20 ticks. Okay, that's all we need. We need $200 on a Thursday and a Friday. That's $400. Some weeks we won't get any trades, but other weeks we'll get $400. And that for a micro account of say $10,000 or $15,000, that's a good percentage alongside all of the other strategies that you're running. So that's that. Let's have a look at the performance report, and I'll show you why we are where we are and why we're using just the one. Obviously on the larger accounts that I run, we actually trading 3 contracts of gold on this particular strategy. So total net profit $1,900 in 60 days. I always run the chart, the data series on 60 days on these particular types of trades, and then roll that every 6 days. 60 days. Look at the week gone by and see if there's any major changes. Profit factor is 99 because there's been no losers. Okay, there's been 10 trades, 10 winners in 60 days. Average trade size $195. So obviously there's a bit of slippage in there as well. We look for 200, we never get it. So this is why at this moment in time, this is running pretty good, and we can run that on the micro account because when it reverses really quick, and we can bang in those 20 tick reversal trades on a micro account. On a larger account, we're running 3 contracts and we have more targets, and we because we can take more risk because we've got a larger account. Let's just go to 6E. Again, we're only looking at reversals on this strategy. And this is another example. So 6E doesn't really react well on Fridays to that data, but it reacts well to that employment data on a Thursday. So what we're looking for is those reversals again, where we have employment data here. We get that initial at 8:30, that initial red biased range that's formed. It just reverses from the red, goes green, data comes out, boom, straight up. Okay, really strong. And again, when we look at this performance report, more losers with this one, but I think it's still a really good, strong strategy to run. And it's a lot of the reversals come on news and data. So profit factor 4.83, fantastic. Total net profit, just using one contract, $754, 71% win rate, still pretty good. 7 trades, 5 winners, 2 losers. Average winning trade $190, average losing trade $98. And then we look at max consecutive winners 3, max consecutive losers 1. So really good performance report. And you add that to the gold, to the FDXS, and to all the other strategies you're running. The enterprise membership with the range breakout and the xBrat algo auto traders, led by me, letting you know what to trade and then optimizing these new strategies is really crucial. We got exposure with FDXS, we got exposure to Europe. That's the DAX micro futures. 6E again, exposure to Europe. Gold, this is exposure to the US dollar really, and then we've got oil, we've got the indexes, US indexes, that sort of thing. So it's spreading that exposure. But this video was primarily designed at that reversal type strategy. So guys, remember when you're playing with this and you're optimizing it and looking for other data points and instruments to trade, make sure you just run the reversal strategy on its own on a separate chart, because we will in time, like the FDXS, we'll be running this normal range breakout and the continuation range breakout, and then on a separate chart we will be running those reversals as well. And we'll be doing the same for the breakout for MYM, range breakout, the range breakout for oil. So hopefully that helps. I'll speak to you all really soon.